All right, welcome back, everybody. It is July 24th, and I'm back with Karen Garrett, and we're going to talk about today's announcement. I think we'll skip the intros. You're going to have to go back to our first episode if you want to catch those. Um, Karen, would you like to break the news to us, please?
Well, if you haven't heard, the Bank of Canada reduced the rate again by a quarter basis point, bringing the overall rate to 4.5 from 4.75.
And is 0.25 each time, is that pretty
No, a
standard?
quarter point is pretty standard. In some actionary times in the economy, the interest rates can be more aggressive, but in a general sense, it's a quarter basis points when they drop.
So something we didn't talk about last time that would be good to touch on today is what the relationship is like between Canada and the States when it comes to these interest rates. You want to talk about that a little bit?
Yes. So the US has different core measures than Canada does. One of the key significant differences for inflation figures is that the US does not consider in a mortgage interest rates or rent into their CPI numbers. The biggest factor for the reasoning for this is because Canada has short-term interest rates, whereas in the US it's very easy for a client to go into a 15, a 20, or a 30-year interest rate. The reason why they do that is because their exits out of their mortgages are much more lenient than our exits if we're trying to break a mortgage term. So the
Mm.
rules around mortgages and commitments to mortgages are night and day different. And so
Okay.
that's one of the key factors why our economy has reduced rates sooner, because we're seeing more rates affected by the drop in the CPI this month and unemployment, where we are predicting the US is going to drop their rates in September. So currently, to put it in perspective, our CPI number is 2.7 and the US is 3.3 currently. So they're
Okay.
still riding a little higher than us. So a lot of that is because the feds have put a lot of their monetary policy is to put lots of money into the economy, and they've been doing that very aggressively. Whereas Canada, because of our deficits, we're more cognizant of making sure we're not going too far into debt. So we're not doing that as the Biden economics was, where they were putting a lot of money into the economy. Their interest rates are 6.5 to 7.5% right now.
So we have questions from listeners. Do you think the Bank of Canada's policy on interest rates going forward will in fact result in a soft landing?
So just to explain what a soft landing is, it's the trajectory of the way inflation is coming down, interest rates are coming down, and that our target rate is 2%, and we're currently at 4.5 with today's drop in the rate. So a soft landing would mean that we're going to hit that target rate as a plane coming down, landing gently to that rate. We're not going to overshoot the runway, which means we're going to get in trajectory where we might see a recession. Because if the rates come down too quickly or don't come down quick enough, then we hover in the fear of having a recession. And there is that always looming right now because we've got high interest rates with an expectation they're coming down. And so a soft landing means that the projection, because as I mentioned in the last meeting you and I had, that anything that happens today really doesn't take into full effect into the economy for up to 2 years. So when
Right.
we're talking about what we're doing today, it's not today's soft landing, it's where we see we're going to be. The projection is that by the end of 2025, we're going to see about a 2.75% inflation rate, which is still above the 2% target rate, which means that we're slowly flying down into that number. We're not going to hit that number hard in 2025 and cause significant damage.
Does that look like a 0.25 drop each time with maybe sometimes not dropping? Is that what you mean? Just a slow.
Exactly. So there are 3 more meetings this year, September 4th
Mhm.
being the next one, then one in October, and then one in December. And then there'll be 8 more scheduled meetings next year. And to get down to that 2.75 prediction by the end of 2025, that means 7 times within those 11 times, we're going to see a 0.25 if that's the natural change in the rate down. So 7 of them. So a high
Okay.
percentage of the next meetings will be drops.
Okay. Would there be any that you would predict wouldn't be for certain reasons? Like when you look at September, October, December, and on.
What happens is it's always based on, so the numbers that came out last week were based on May's numbers. So there's always a look back to what's going on with the economy and then a projection of what the next change will do to make the look back change, if that makes sense. So
Right.
there's not a lot of looking forward to say that December happens because it's Christmas and people spend more money, or spring happens and there's housing, because that's all built in to what the Bank of Canada's agenda is anyway. They're already padding their information based on projections, where you and I might think, well, of course, there's going to be more spending at Christmas. They're not likely to have that affect them because they would have already expected that, if that makes
Okay.
sense.
The other question we have is, how do you see this policy affecting the mindset of resort property sellers and buyers? Now, for us, obviously, this is Whistler based, but we're not the only resort, and we're reaching viewers everywhere. So when we look at that context of second homes, recreational homes, do you see that changing that mindset?
Okay, so as a Canadian buyer, of course, if interest rates are dropping, then it would make there's more confidence in being able to afford more, and you'll see some spending, some more purchasing. There's still a long way to go, because even this drop today at a quarter point is only putting 16 more dollars for every 100,000 in your pocket. So it's not like this is going to be an overnight change where people are going to buy homes because of this market, but you are going to see the trajectory and then the confidence coming. But it
Mm.
does sound like there could be a prediction of a fall campaign, which is great for your industry.
Yeah.
And then for the US or any country, a couple of things to consider. One is that Canadian dollar is still low relative to the American dollar. We're not low international to other economies, but we are to the US. This change in what's happening with our interest rates is not going to make the Canadian dollar stronger, and it's not going to change too much variation between the two countries. So, with that, the American buyer still is strong to buy in Canada because they are getting a discount, as you well know, on
Mm.
buying a property in Canada. So, we are going to see that as a potential positive. It's not going to make our dollar go up, which means it's going to be less buying power, which means it'll slow down. I think we're going to still see strong. And then the other thing, as we just talked about a minute ago, I feel with the US changing their policies, where they're going to probably lower their rates in September, that's going to put some more confidence in the buyer from the US as well, because their
Mm.
costs of buying the rest of the stuff that they're forwarding every month is going to be going down. So there's more confidence there too. So I think it's a good thing.
Was there anything else you wanted to touch on with today's reduction?
Yeah, I actually wanted to just touch a little bit into your field, which is housing, obviously. And one of the things I've been reading recently is that for every one house, or as a stat, there's 4.9 people looking for that home. So even though rates may come down, more properties may go on the market, the bulk of the housing stress pressure is not going to ease. So you're always going to see housing as a good investment because it's not ever going to be saturated. The stat is that we need 100,000 employees in construction to be hired every year, and most of them are going to come from seasonal non-resident foreign workers, and the government is putting more stringent guidelines around the foreign and non-Canadian workers. So you're not seeing the government focusing on that. So from your perspective, you're going to always see homes as a strong investment. We're not going to get saturated in any time soon.
Mm. So the last question that I have for you is actually a bit more about your business. It's kind of a personal question, but I'm assuming that I'm not the only one who's looking. So as I mentioned last time, I'll be looking to renew my mortgage now. And I've never worked with a mortgage broker before. You're kind of the first one I've ever talked to. What does that process look like? And what does that relationship look like?
Why use a mortgage broker?
Yeah, I guess so.
Yeah.
Yeah.
The key thing would be that a mortgage broker's primary job is just to work on mortgages. We're not at a bank working on investments and commercial stuff and residential and then bank accounts. We are focused completely on mortgages. That's our day in, day out career. We have the ability to approach many lenders. So unlike your bank where you'd have to go into the bank, tell your story, find out your interest rates, probably do your own research and due diligence to see if they're offering you a competitive rate, go to another institution and do the same thing. We offer that service. In 99% of the cases, and certainly up front, you would know if the broker has to charge a fee. The broker normally is paid by the lender. So there's no negative, there's no hidden costs or anything for the borrower to come to a broker as opposed to going to their branch. Why I say there's a tiny percentage of fee files is that when you get outside of the traditional lending, the chartered banks that are offering what we call A lending, then your circumstances for the borrower might dictate that they don't qualify for those A lending situations. And another reason, again, why you would want to go to a broker over a branch, because a branch is just going to say yes or no, whereas a broker is going to say, I can't do this, but I can try this, and I can't do this, but I can try this. And some of those latter thises usually come with fees or higher rates. A good broker would obviously go and beat the path of the great rates first and then work backwards from there, also coaching you along the way on what you can do to improve and get back into those A lending rates if you're not in them already. So the short answer is that a broker kind of cuts all those corners for you, does all the work for you. We don't have access to every single lender out there. And there's certainly times where RBC can offer a competitive or even a better rate than we can offer. And so it's not always the case that the broker has the best rate, but in my experience, the broker has a lot more than just a rate to offer. I would answer an email or phone call at 10 o'clock on a Sunday night. I had a call last weekend where it was over the hot 32-degree weather and I'm inside helping a client that was on an emergency purchase. You're not going to see that level of service from your branch. You're going to see the make an appointment. I'll call you back within 24 hours or 5 hours or whatever their mandate is. And a broker, because we're only paid based on a closed deal, we're going to try to do our best to retain that client. And then even after that, I have clients that reach out for just random questions, checking in, experience on what would I do here? Should I sell this and buy this? It's more personalized with broker, in my opinion, or at least I've had that experience.
Okay, I think that's probably it for my questions anyway, unless there's something else you wanted to touch on.
I'm going to predict that the
Okay.
next 3 meetings, we're going to
Okay.
have at least two rate drops.
2 out of 3. Okay.
Yeah. That's my
So I'll
prediction.
see you again on September 4th.
Yeah, absolutely.
Okay,
Thank
that
you. And
sounds
thank you
good.
again. Great rest of your time there.
Thank you. You too. I'll talk to you soon.
Okay. Bye, sweetie.
Okay.
Bye.